points on the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in on February 8th, 2022, and the stock market is ignoring one big thing about today. It was a wild day. We surprisingly closed down red on every index early in the morning. We were up 1% on the NASDAQ, but there was a lot of things beneath the surface today, and it is setting us up for a very pivotal week here with this CPI. So we got a lot to talk about. I'm going to go over everything that happened in the market today. Again, we have a big catalyst on Wednesday, and pretty much what we're looking for until then, we need to see the earnings, but we want to spot either a up or downside bias coming into all of it. But there was a bunch of different news today that we need to go over, and really the next few days may be a little bit slower until we get the data, but all of these other factors brewing as well, it could increase some of the volatility. So I got the plays for you. I got the keys. We did do a couple of earnings plays, and I'm pretty excited about them, and then everything we're going to be watching for the rest of the week. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes for open. It's the first link in the description, and it's been in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/thestockmarket. You can post the plays, see the plays, watch the watch list come to life, and yes, if Bibbidi Bobbidi Boo comes up in a normal conversation and you could vibe with it, then yeah, we are the place to be. And the most important thing you need to do, post your watch below. Let us know what you're looking at. Got any plays, comments, remixes, anything. Post them below and source that info. Shout out to chat, baby. And you get Jerome Powell in the background. But if you don't know, we have brought in back the free long-term alerts. First link in the description. It is free 99. You will get a text anytime we add to the long term. So right off the bat, as far as what you got today, it was a slow day for volume, but there was a lot of news, which we're going to go over when we get to the news and events, but there was also a lot of different areas moving. So the number one thing that the market is missing right here, right now, and I think this played a way bigger factor than we realized, but it was the ECB. We brought this up on the watch list last week. Remember, we said the European Union is going to go through what we went through a couple weeks ago. Well, you're watching that come to fruition right now, and that's what we saw today. A lot of the European bonds, they got absolutely destroyed. You had more talks from Christine Lagarde. That's the head of the ECB, and pretty much even throughout European close, up until she stopped talking, that was when we were able to actually go up. So I didn't know if it would have too big of an effect, and again, with a lot of this stuff that we're seeing, we're going to talk about the divergence. One thing that could be possible, ECB in Europe is important, but the United States really does have an ability to ignore it. So it just depends on the level of carnage, and that's why right here, right now, we do have to wait for our data, and I think U.S. investors are going to be looking at the CPI more, but the ECB situation, it could add a little bit more to the volatility. Essentially, the simple way to understand why the ECB is bad, because now you have a whole nother side of the world talking about raising rates, and now the whole world is worried about all of the central bankers pulling the liquidity and getting rid of the easy money. So that was the big factor with today that I think had a very big influence, but now you also had a bunch of other things. There was the Russia developments, and there was a joint press conference between President Biden and the president there of Germany. Is it president or prime minister? I don't know, of Germany, but they announced some bigger developments there, getting Germany on board. That was part of it. Then crypto, all of the risk assets in crypto absolutely killed it, and it was actually on the news of one of the big accounting firms converting a portion of their balance sheet to crypto, so people like that. And then on top of that, we did start off the morning with earnings, and there was still a little bit of that earnings mode anticipation. So despite the volume being low, there was actually a bunch of news, and there was a lot of different things, but it is creating a big divergence that we need to talk about. Now, before we get into that, we're going to come down to the pretty picture here, and what this is showing you is a 7-week consecutive rally for oil, and over the last 20 years, each one of these red lines indicates a 7-week straight rally, and as you can see here, pretty much in the last year or two, the last 4 instances have occurred since 20 and 2021, but essentially what this is saying is that you can experience some short-term decline here with oil. Usually Usually on 3 months, it ends about 7% higher, but essentially 7-week rallies are pretty rare for oil. So we saw a lot of the energy markets, and that was a big factor here today. You are definitely probably going to see a lot more oil volatility in this week and then coming into next week as well too. But like we've been talking about, there is a bunch more earnings tomorrow and even Wednesday, and essentially what we're waiting for is to see if we get a upside or downside bias. So I've talked about this a lot, but quite simply, if you come to the chart, we want to see is the chart leaning downwards, getting us back into wave 3, or do some of the earnings start to tilt us upward as we get into the CPI data on Thursday? So the CPI is definitely going to be big. We keep talking about it, but one thing I need to discuss, and it makes sense even with everything we've gone over already with the ECB, but the divergence is getting a lot bigger. And what I'm talking about, pretty much since February 1st, all of the bond yields have kept going higher. The Fed rate hike expectations, they have all been pricing in a bigger move, more rate hikes, but the stock market is up a lot since February 1st or even January 31st. So this is the point that I'm talking about, because that CPI is going to be the event. Right now, the bonds and equities are diverging, even credit markets. So depending on whatever we get with the data, that will either close the gap or it will confirm, okay, these assets could do that, these assets will go there, and then we will see the digestion. But that divergence is big, and if you even notice today, rate hike expectations, they gapped up again. It was not a good sign, but the market was still able to go up, and then they kind of stayed steady. But there is a big divergence that is already formed. Really, if it gets any bigger, that's where the move even becomes just crazier to ignore. So keep your eye out for that. But can't stress this enough, the real news that we might get in the next couple of days, it may have to do with Europe, and whatever their assets do, that could influence us. But don't forget, CPI will still be a key driver. Now, coming into the company news and events, we're going to start here with earnings. There was a couple, and I forgot about Amgen, but they did good. And then Chegg, they jumped up 9.6% after hours, and they beat all forecasts as well as the current earnings. Take Two, they dropped 2%, but they missed on guidance and their earnings. And then SLQT, they dropped 42% after missing earnings estimates. So another one of the Squid Game earnings, but there wasn't too many today. Tomorrow and Wednesday, just don't forget, you got Disney, Uber, Lyft, and a bunch of other companies this week. So you still got a pretty active schedule, but that was the first piece. And the second one, we caught this one earlier throughout the day, but CFVI Rumble, they sent a tweet. The CEO sent out a tweet to Joe Rogan and offered him $100 million for a 4-year contract to join Rumble. They said he won't censor him. They'll make the world a better place. And at the time, I mean, CFVI went up about like 50%, but at the time, $100 million was about 25% of their market cap, I believe. So pretty interesting, but the stock went up. There was a lot of DWAC stuff as well too. Then Valander, VLDR, they soared 82% after hours after they said that they've agreed to issue a warrant to Amazon.com. And essentially, Amazon is taking a 5% stake with them through the warrants to acquire about 36 million shares. And they are warrants at around like 4 something, the average 30-day price, but they expire or they are vestable about 8 years from now in 2030. So thought that was interesting. A lot of the other LiDAR companies went up. We'll see how this plays out. We've been holding this for a while. We got clapped, but that helped bring it back to life there a little bit. So keep your eyes on that one. And then Peter Thiel, he announced that he will be leaving the Meta board to pursue his Trump agenda in 2022. Again, Peter Thiel also helped co-found Palantir. A lot of people don't know that. He's responsible for a lot, but he stepped down from Facebook, and he pretty much said that he doesn't want people to think his political stuff has anything to do with the company. So he's kind of separating it. Him and Zuckerberg have a pretty good relationship, so pretty interesting, but we may see a follow-up there even with DWAC. That one was interesting, but there was that. And then, like we said, there was a joint presser with Biden in Germany, and he did say that he will halt Nord Stream 2 if Russia invades Ukraine, and he said that in front of the German president. And if you remember a couple weeks ago, the German president was not about that. They really didn't want to play with that. So this was an interesting development. It does correlate to when we did start seeing the market decline. Today was a simple day, and like I said, you could see kind of the ECB stuff, but you could have also attributed it to earnings and all that. Then we started going up, but this was about the time that Biden started speaking. But then you could also say this was one of those end of the day volatility liquidation moves we've been seeing. So it goes both ways. It was definitely a new development in the whole Russia-Ukraine saga. China. So we'll see what happened. And then BABA, this is how they started it off in the morning, but BABA said that they will be registering a bunch of shares. I don't know if it was 1 billion shares or $1 billion worth of shares, but essentially people are interpreting this as SoftBank looking to sell out their stake. So the stock was down about 7% today. A lot of the other China stocks got hit as well too, but this one is a very big piece of news because go look at BABA's chart. They are right back to those lows that they were at earlier. So this one is a very, very big deal. And then United States governors, a lot of them are lifting the school mask rules, New Jersey and Connecticut. You're starting to see a little shift here around March. So this was a big update there with the virus. And then Raytheon, this one is pretty wild, and we may see this one develop, but Raytheon Missiles unit, the CFO, the VP of contracts, and the general counsel all left the company. They did not give a reason for it, but RTX Raytheon, specifically their missiles unit, it is facing a U.S. investigation right now into how they have reported the cost and other financial matters involving the defense contract. So this one is important. The stock did go down after hours. We will see how this plays out over the next few days. And then Apple, they made a rare acquisition. Again, Apple doesn't really acquire people, but they did announce that they bought a AI music startup. It's called AI Music. It's like artificial intelligence for music. Like you could like AI for video game music, and it makes own royalties. It's honestly wild. So pretty interesting, but a very, very rare purchase there by Apple. So there's a little bit of news on that. And then US and Japan, we have reached an accord to remove the Trump era steel tariffs, but this may actually hurt some of the domestic steel producers. So keep an eye out on their stocks over the next coming days. But like I said, there was a bunch of different news. I'm sure we're going to get more. You still have a full plate here for earnings. So that's what we're waiting for, really. In the meantime, it's going to be what happens overseas in Europe, and then what is the data going to be on Thursday, and hopefully the earnings tilt us to the upside to make sure that the recovery doesn't turn into volatility. So I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, I got 4 different stocks that I'm looking at coming into tomorrow. I made a play on 3 out of 4 of them, but the first one is going to be Disney, and this is a pre-earnings play for this week, and I am really, really liking it. I like how they held up today. If you remember, we had some old plays, and all of those came back to life, but now I was comparing the premiums. You do have some longer dated contracts that are still a little bit cheaper, so I'll go over it, but essentially, I think they're going to be a toss-up when it comes to earnings. Essentially, a lot of people have good expectations and then bad ones. We talked about this yesterday, again, comparing them there with what happened with Netflix and all of that, so I'm really, really liking it. I'm liking how the calls are looking, but essentially, if tomorrow does do good, I'm holding the calls. I may even grab some puts as well to kind of play both ways, and we'll see what happens on the pre-earnings, where it leaves us. Hopefully make some free on both sides, and then we could play the earnings, but I do think Disney earnings will be a little bit more important. So as far as the play, if you remember, we had those old Februaries out of the monies. I forgot which ones they were. It was the 185s, and these ones decayed, but then they came back, and this is what I want to show you pretty much. This is where we got them after the whole Netflix fiasco and all of that, if you remember. So they're holding the same price, but now I grabbed the Aprils today, and I grabbed 10 of the 190s for 32 cents, but we pull it out to the daily, and you can see it's still a lot lower than those first couple days after the whole Netflix fiasco. So this is one thing I liked about it. I did have to pay a premium. It wasn't the highest on the day, and they went up a little bit, but it did chill out. Again, this is a pre-earnings play. I'm probably going to flip one set, either the Aprils or the Februaries, as we get into earnings. If I get the move, if I get fully clapped on it, I may be forced to ride it out just like we did with the Amazons, but I do think we are going to get a lot of movement. If you notice today, from when we got the play, the stock kind of moved around a lot, but the premiums, they really, really did hold a floor. So that's the one thing that I really, really liked about it. But that is the first play. Coming into the second play, you shouldn't be surprised, baby. Airbnb, we talked about this one yesterday. I did decide to go for it today, but this is not for Airbnb earnings, even though it covers it. That's why I got it, and honestly, I really do like the April and longer dated contracts on Airbnb. After that whole fiasco, I think it is looking good, but this is playing Expedia's Sympathy. They report this week. Expedia owns VRBO, another vacation rental. There's going to be a lot of similarities, and a lot of the other travel stocks are leading. If you actually go compare Airbnb to Booking, you'll notice a different trend, and it does look like Airbnb is lagging. So I like Airbnb. I did decide to go for a play, but now as far as their earnings and what I expect too, the thing you got to notice about Airbnb, the guidance is both good and bad. Remember, last quarter they absolutely killed it, but fourth quarter is historically slower for them. So analysts are expecting a revenue decline almost like 30-40% in last quarter, and then that's just seasonally kind of how Airbnb does. So that's the part where guidance isn't too high, but they did do good last quarter. People are expecting a lot, so it goes both ways, and that's why if Airbnb, if they beat the lower guidance and can kind of prove something new here for fourth quarter, it will get really crazy. Otherwise, it's kind of like Disney. It's both good and bad, and it's not as clear cut, whereas again, all of the earnings play with bad guidance, those were the ones that were really, really able to do good, and if the company had too good of guidance, it was a very, very big uphill battle. So as far as the play, I decided to go with the April 230 contracts. I grabbed 20 of these at about 71 cents, and I have old 240s and even old 220s that are down a lot when we got them after the first earnings. So thankfully, they will carry into earnings, and with these plays, I may want to flip it if we get a crazy pre-earnings move, but I do plan to hold a lot of these for the earnings. This is one I am actually going to ride through, and the premiums aren't that crazy. That's the one thing I'm liking about it. At the very least, you have not seen the random crazy pop, so that's what I'm kind of hoping from here. I may want to play both ways, but I grabbed 20 of these 230 contracts. Like we said, they're pretty much at the low, and we were buying a lot of these around $1 or $2, so this is a strike price that I really like, specifically the 200s and 220s, so thought it would be good, decided to get some, and even before the pre-earnings run up, and I especially think after Expedia and that Sympathy, we are definitely going to start watching the premiums move, but we will see what happens. That is the second play, and then coming into the third play, I grabbed the Pelotons, and pretty much the news is out there for the buyout. The stock is still holding. It gave back some of it, but you're probably going to get a lot of back and forth with it, and they have earnings this week, so maybe they do an announcement right after that, but until it sells off back to original levels, I mean, the story will still be at play. So somebody asked, they're like, why wouldn't you just grab shares? I'm not really trying to go long on this. I'm not trying to take advantage of the buyout and buy the shares and sell it for more as much as I am just trying to get some of the volatility here with the options and this type of news. So they do have the earnings. We'll see what happens. I did go with the play, but they did get clapped. We struck really, really early in the morning, and the plays had a lot of premium. I guess it didn't close down too much. I bought 10 of these $70 calls for April at about like 50 cents or so. So I guess not too bad. The last trade even came in at 50. They were up a lot. I mean, again, with all of the carnage, it wasn't too crazy, and kind of like the Snapchat in a weird way, these contracts were just trading at this price before the news. So sometimes I like that sign, especially if there is enough time on the contract. So thought I would ride it out. They went down a little bit, but we will see what happens. Again, this one is more speculative and risky, but we do have news. The problem is just going to be the timing, and like I'm saying, just don't forget about their earnings. But that was the third play, and then finally, DWAC. Yes, DWAC, the Trump stock. Essentially, I'm basing it all off of Peter Thiel, with him announcing that he's leaving, and then people already tying it to Trump, and him even saying he wants to do stuff in politics. This one might be very, very good for DWAC. They did have bad news today that they are delaying the rollout of Truth Social by 1 month, so that hit the stock a little bit. I want to see how this plays in, but if you get any mention of Peter Thiel joining DWAC or Truth Social or anything like that, I mean, it would be a big shift, and you would watch a big reaction. Not everybody likes Peter Thiel with some of the drama there with Trump that he's had over the last like 5 or 6 years, but this guy has invested in a lot of early companies. Again, Facebook, PayPal, co-founded Palantir. I mean, you could go down the list, but he's pretty wild. So if he does announce anything with DWAC, I do think it will go crazy. So I'm definitely going to keep this one on watch. But those are the main plays. As far as everything else, we showed you all the other trades. I didn't do anything besides those trades I made. I did take profits on Wells Fargo. We had those Aprils near the money. They went up about 100%, took the profits on that, but we'll still be eyeing banks. They did good. As far as tomorrow, watch Valander. We'll see how everybody takes the positive Amazon stake news. Then NVIDIA, they were a big leader today, and a crazy fun fact for today, market cap wise, Nvidia is now bigger than Facebook, which blew my mind. Again, we'll wait till their earnings, but remember, just a couple months ago, they were on this slate to become the next $1 trillion company. So definitely going to be keeping my eye out for them. They did very, very good today. They were a big leader, so watch out for them. Again, Peloton, we'll see how it plays. I'd even watch Nike as well as Amazon, but specifically Nike too. Remember, they're the ones tied there to that news. Then CFVI, we got this news early. It was pretty interesting. I'll see how it plays out tomorrow. Again, it is still in the SPAC stage, so I'm a little cautious, but definitely got a lot of momentum today. Then Facebook, they kept going lower. A lot of those old puts, they're finally coming back. I have the other ones up a lot, but if you notice, the further out the money, some of the volatility slowing down, but there may be some good opportunities to keep playing this. I'm waiting for 220. It's almost there, so we'll see if it does flush beneath there. That's where it gets really interesting, but essentially anything after 220, just be on the lookout for it to kind of start basing out, or at the very least, that is my expectation, but watch out for them. Wells Fargo, again, the banks are back to killing it, so I am going to actually be looking at a couple of those plays. We took profits along the way. Hopefully it doesn't just go crazy like oil did, but we'll see what happens. Again, Disney for earnings, love it. Coinbase, again, with all of the Bitcoin and crypto news, they did very, very good today, but keep your eye out for them. I mean, $200, like a good price in the short term, but realistically, again, like 260 is the level I'm looking for, but this thing can move fast. We'll see what it does, but I'm definitely going to be watching them. Amgen, earnings was good, but they had the pop and lock, but watch out for them tomorrow. That one could be a big one. DWAC, like we said, they dropped after they got that news of the delayed platform, but we'll see if Peter Thiel has anything to say about it. Uber, I really like, but the earnings run-up premium has already started, so I really, really like Uber, but from here to here, it's literally jacked up on April contracts. If the contract was going for 10 cents a couple days ago, it's now going for 30 or 40 cents, so you're spending a lot of money now to get into the pre-earnings. It can still go crazy, but essentially, there is a lot of juice underneath this right now, so watch out for that. Again, Airbnb, they still did good in the midst of everything today, so going to be watching them. Really excited for their earnings. And then Pfizer, they're going to report a lot of movement. You can kind of see how they're pinned there, and a lot of people are noticing that Pfizer options are very expensive in a lot of pricing, so this earnings should be pretty pivotal, so we'll see what happens. And then finally, TLT and the dollar. Again, the divergence just keeps continuing. You saw it a little today, but really the markets didn't move too much, and then they did kind of chill out, and it does make sense because essentially European bonds went crazy. Our bonds kind of stayed the same. We're going to watch a little bit of a push and pull, but I'm pretty sure after the data, we are either going to watch the bonds stay the same and the stocks converge, or stocks are going to go up and then the bonds are going to start playing catch up. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet sign. I need you. Remember, you can't curse what's already been blessed, baby. But the code loves you. I love you. I'm going to see you in the morning. Let's go.